Andrew here from Trader Plus, guys, and today I'm taking a moment to sit with the market sprint to answer a couple questions about my trading journey and my trading career for you all guys. I've been trading for the past 20 years and I've been a full-time trader for the past 12 years. My trading journey started and ended with the Unit Trust Corporation, but not in the way that you think. So 2 weeks before I got started or involved in trading, I got 800 US and I went into Unit Trust and I opened a US account with them. The rep at the time encouraged me to get a debit card for the account. I don't usually want to get cards for those type of accounts because at the time I felt like getting a card would make it easier for me to access the funds when I'm trying to not touch the funds or to save that money. But I ended up leaving with the card. This is why I always say God sent trading for me. God had a part to play in me getting involved in trading. I left with that card, guys. 2 weeks after that, I went to my first meeting and it was a company out of Orlando. They were operating in Trinidad at the time. And I went to the meeting and they had their program and they did the sales pitch and the program was 5,000 US dollars. I didn't have the 5,000 US dollars, but I said to myself, you know what? I'm going to hustle. I'm going to grind. I'm going to get that 5,000 and then I'm going to start. And at the end of the meeting, they said, you know what? But we have a special tonight. If it is you get started now, tonight, if you swipe your card tonight, you are going to get access to pay 799 US dollars for the program. And you're going to pay off the balance in like a monthly payment plan, a payment plan option. And I just smiled. I was able to take my card and got started. That was a Thursday. The Friday night, I went and got a personal computer. And between Friday and Monday, I went through the entire modules, all the programs. I went through the entire programs. Monday, I went into the office to open up my first live account, and they were confused. They said, you just bought the program. You need to go through the modules, complete the modules first. And they were shocked when I was able to answer the questions that they started asking about the modules, about the markets, about the setups. They were confused about it, but I was able to answer the questions because I did take the time to go through the modules. I didn't just rush through. So they were shocked, but I was able to start my live account. And I was one of the few students at the time who was able to actually pay off the balance of the program from profits made from my trading account. So I always tell people, you need to invest in your program. I continue to invest time, invest money in terms of I used to travel. So the same way UE student might travel to another country to complete their degree, I saw it as I needed to be there. So when they had seminars in Orlando, I used to take money out of my pocket to travel and go to those sessions and basically learn the skill of trading with them. And I went from being a student to becoming one of their top students, and then also being able to go from doing seminars to be able to host seminars with them and do interviews with them. And then I came back to Trinidad and opened my own trading company, guys. I would say my trading style has changed in the last 5 years. One of the major changes that I have made was basically patience. I've added a lot more patience in terms of waiting for the market to come to me for my setups rather than jumping in. Previously, you tend to take a lot more risk. It works out sometimes, but it doesn't work out all the time. But for me personally, I started being applying a lot more patience to my setups, ensuring that the market comes to me and meets all my requirements before I enter a trade, guys. My style of trading is price action, so I tend to do price action a lot. And recently I've added volume and delta profiles with my trading, but I tend to still kind of focus on blank charts. I don't really use indicators. I used to use indicators a couple years ago, but then you realize that those indicators most indicators are lagging indicators, meaning data has to print in order for those indicators to update. So if you're dealing with the RSI, the market has to move 500-600 pips before it gets to that overbought or oversold zone, and you would have missed that trade. Whereas if you're dealing with price action is the only leading indicator because it allows you to predict with a higher, there's going to be no indicator or nothing that's going to be able to predict with 100% what the market is going to do. But to me, price action gives you that edge where you have a higher percentage chance of predicting what the market is going to do next before the actual move happens, and as such you get to take advantage of the move. Currently, for short-term trades, I could go anywhere from a couple hours to maybe a day or so for what I consider short-term trades, and then there are trades I'm comfortable being in a trade maybe 3 to 7 days a week. Some trades I'm comfortable enough to hold over the weekend, but that depends on what news is coming out the following week, or what I think the market is going to do, or what level that we are at. But I have developed my strategy where I am comfortable being in a trade for up to a couple weeks at a time. Those are my longer term trades, but shorter term trades, a couple hours to a few days, I could stay in trades. Now that is something that I developed. I've worked with traders and enough traders to understand that that's not something that would apply to all traders. A lot of beginner traders, I've worked with traders that can't be in a trade overnight because every minute, every hour on the hour, they have to jump up to see what the market is doing. And that comes with experience. Being able to sleep while you have trades open really only comes with experience. And yes, there's other factors like over trading and stuff that would cause you to be jittery towards a trade. But for me, personally, I've developed my strategy where I don't want to be in front of the computer 24/7, because to me there's no difference with being a doctor or a lawyer, high paid, but you have to be there presently. You could be the best doctor in the world, and if you're not there, you're not going to get paid basically for your job. The receptionist could be there a million times and see the surgery a million times. You're not going to walk into a doctor office and let the receptionist do the surgery or the operation for you. The doctor themselves has to be there. So to me, I wanted the freedom to be able to walk away, the freedom, as I said, because I was able to retire at a young age. I wanted that freedom to be able to do whatever I wanted to do without having to be in front of the charts 24/7. But that patience with the markets, being able to allow a trade to unfold, was developed over time. That was not something that happened right away. I rely on rules. I mean, this question is one that makes me laugh, but I get where it's coming from. Again, a lot of traders rely on their gut. They feel this is going to happen without any kind of data, without any kind of analysis, or when the analysis is pointing to a different direction, they still hold on longer than they should, because to them, they feel like they're right, the market is wrong. So one of the things that I needed to learn a while back was to understand that the market is always going to be right. I am trying to take advantage of entering the market and exiting the market as best as I could, but you can't rely on gut feelings. The best thing is going to be to have a set of rules and try as best as possible to stick to those rules. And why I say try as best as possible, all traders tend to bend the rules a bit at times. All traders sometimes feel, this trade is much better. But if you're trading long enough, I could guarantee you that the trade that you double down on is the trade that particular somehow karma works it out in a way that particular trade doesn't work out, and you double down on that particular trade, and then you go back to I wishing that I stuck to the rules, and or you end up in a cycle with revenge trading to try and make back and all of that. So it's better that you just stick to your rules rather than relying on gut feelings, guys. My non-negotiable, I would say, for like cutting my losses, would just be for my stop loss. To me, when I enter a trade, I attach a stop loss to it, or area that I'm looking at, and once we reach to that area, I exit the trade. And it will always be better to just take that loss and go again, rather than wishing or hoping that the market U-turns at whatever the next level is, because sometimes the market could just bypass that next level and keep going, and that's how you end up blowing accounts. So again, I personally have blown enough accounts over the years where I no longer do that. I would rather take a loss. It's always easy to recover a loss, to have a losing day, and then be able to recover and go again.
Skip the boring lectures. Introduce your children to financial literacy through the magic of storytelling. Our children's book series turns complex money concepts into fun, unforgettable adventures. Kids learn savings, budgeting, charity, and much more while reading about characters they will love. Give your kids the ultimate head start. Search Making Money with Jacob and Jerry. and a booming new business with Jacob, Jerry, and Josiah on Amazon today.
The first thing that I do is calculate how many pips that particular setup would require me to risk when I'm wrong. A lot of traders come into a trade and what they do is immediately say, you know what, they only want to risk 50 pips, and they get stopped out, and then the market goes their direction. And one of the ways to avoid that is simply by calculating how much risk that particular trade in terms of pips requires. Because some trades you might get away with a 75 pip trade, a 75 pip stop. Others might require 100, others might require 25. It all depends on the setup. No pair is going to give you the same setup all the time. So to me, it's absurd every time to say you are only going to risk 50 pips, because you would be putting your stop in the way. A stop should go where you are wrong in the market, not where you feel you want to put a stop. So you might take a trade, and if you're buying, for instance, and the stop has to go beyond that previous low might be 60 pips away. And sometimes because you said, you know what, I only want to risk 40 pips, you put this stop in the way, the market spikes down, you get stopped out, you think people are hunting your stops, and then the market goes the direction. You just had your stop too tight. You didn't give the market any room to breathe. So what you have to understand is what you can't control before, how much pips this stop is going to be, but what you can't control is the value of those pips. So if I only wanted to risk $100 per trade, I could say that, and if I found a trade that requires 100 pip stop loss, I could trade by $1. So worst case, I lose $100, which is what I was willing to risk. If I find another trade, or the second trade that I take only has a stop loss of 50 pips, then I could trade that particular pair by $2, and that $2, if I lose, I would still lose 50 by 2, $100. So both of those trades, I lost the $100, which is what I was willing to risk, but I could not determine the pip value. And that's where a lot of traders like get trapped or fall into that category, where they try to predetermine the risk required for that setup without even seeing the setup. And that might work for some traders, but it doesn't work over a long period of time, where you constantly say, you know what, you only want to risk 20 pips. You get stopped out 2, 3, 4 times, and your analysis is not wrong, because a lot of the time traders can determine direction. So your analysis is not wrong, but just you're not giving the market any room to breathe. One of the strategies that I implement after a major loss is that I walk away from the chart. It's as simple as that. Whether it be depending on the loss, depending on my mind frame or mindset at the time, I basically could walk away from the charts for a couple hours to maybe some days. So if sometimes I take a loss on a Thursday, depending on the loss, I mightn't trade Friday and then the market closes. So it's not until Sunday. So I give myself that couple of days to reset and come back to the charts with a fresh mind, rather than getting into that pattern of revenge trading and wanting to jump back in the market. So to me, that is healthy to do. If it's earlier in the week, or if it's a good trading week, then I might say, you know what, no more trades for the day, the balance of the day. And one of the techniques that you all need to implement is, when you all say you all walk away from the charts, actually close off the charts. Saying you walk away from the charts but leaving the charts open, and you're hearing your alerts going off, or you're watching what the market doing, only causes your anxiety towards trading to raise more, and it encourages you to want to jump back in even when you don't have a setup. So you start seeing setups that are not there, and you basically enter a trade, overtrade, you're trying to make back your revenge trading, and you end up in a whole cycle that could lead to you blowing your account if you don't stop it in time. So I would say, basically, make sure that if you are walking away, that you walk away. Don't be pulling it up on your phone every minute. If you're on social media, don't be looking at, you know, what this next trader made today. They made money. That plays and takes a heavy burden on your mind. So mentally, that does affect you, and it'll affect anybody. The day that I lost, somebody else is winning and they're talking about it. It gets you into that cycle, as I say, where you want to go back and just jump in without proper setups, without any kind of without a better mindset to be able to really take advantage of the markets and then make back what you are doing. So it'll cost you less to actually walk away and don't take any more trades than it would to just stay in front of the charts and continue to try trading. The single biggest lie that I would say new traders are faced with, or beginners are faced with, when it comes to achieving financial freedom, is that it requires little to no capital, or that it's cheap. Now, When I say cheap, I don't just mean financially. I mean time-wise. I mean, when we did economics, one of the things that you used to have to consider is, what is the opportunity cost? What are you going to give up to achieve your financial freedom? So some of y'all think you can't do it without giving anything up. That's not going to be possible. Whether it be money, whether it be time, whether it be effort, it takes a lot to be able to achieve financial freedom in any field, whether it be trading, whether it be another physical business, whatever it is. It's not something that you just achieve by just showing up once or twice. You have to be consistent. You have to basically put in the effort. When it comes to trading, it's no different. You have to put in that effort. As I touched on earlier, it's not going to be free. A lot of y'all want to achieve financial freedom with $100 program and $100 course. Now, I'm not saying that you have to go and spend $10,000. I saw the value in spending 5,000 US at that time years ago. And just like now, if I tell you all to spend 5,000 US, a lot of y'all are going to say, no, I'm not going to spend 10,000 US, but I know, or 5,000 US. But I saw then what would have been happening or playing out later on, and I told myself, if I really learned that skill, and 5,000 was the cost, as I told you all, I used to have to pay out of pocket to travel and go. I used to have to find hotels, and then again, that paid off in the long run. All of those things, are you all willing to go through those things? But a lot of clients that I deal with, they want to spend $100, and if we lose $100, that's, and I get it, at the time that's life-changing for you. That's all you have to invest. But you need to ask yourself, is it that that was just a rough period? Is it that this doesn't work for real? Or is it that you are willing to really push through? I had to push through time and time again, and that's where I am at right now in terms of having that freedom, right? I'm no different to you. I don't have any special set of skills. As I said, God put trading into my path, and since then I was just able to take advantage of it time and time again by showing up time and time again. Don't feel like I don't have hard times. Don't feel like I don't have programs that crash or programs that don't work. It still happens from time to time, guys, but it's about you or me continuously showing up time and time again to really work and put in the effort to really sustain and achieve, or if you're doing it for the first time, to achieve that financial freedom that you want. Because financial freedom to different people also, it looks different to different people. So the reality of it is, for somebody who doesn't want much, maybe don't want to travel, financial freedom to them could be achieved a lot less, right? With a lot less. Whereas to somebody else who wants to travel, who wants a certain lifestyle, they're going to have to put in a lot more. And that's how it is. You do pay for your financial freedom. It's not free and it's not cheap, guys. I want to say a quick shout out to the Market Sprint and to really thank them for having me on today. And for those of you who want to get in contact with me, who want to find out more, maybe want to work with me, you all could reach me on TikTok at TraderPlus777. That's my username on TikTok. Or you could send me an email at plustrader777@gmail.com, guys.